So yeah, hello all. Thank you all for joining the Startup Club FinTech Pitch Night today. I'm Batuan, I'm the host. Before we start, let me briefly explain what we do at the Startup Club. For those who don't know, we are a global entrepreneur community. We organize industry-specific pitch night and investment conferences to connect entrepreneurs with investors. Since 2019, we cover industries like FinTech, health tech, B2Tech, fashion tech, ad tech, prop tech, and many more. And we are successfully supported tens of companies and investors to find right partners. And today we invited 5 unique fintech startups. By the way, let me share my screen so that you can take a look at the presenters. All right, we have 5 fintech startups focusing on different fields, different areas such as split payments, lending as a service, travel insurance, fintech solutions for SMEs, and so on. Each company will do 5-minute presentation that will be followed by 6-minute Q&A with the advisory board members. So each company will have 11 minutes. Event will take less than 90 minutes. So we will finish just before 7:30 CET or 1:30 Eastern time. And we have 4 advisory board members. I will let them introduce themselves as well. They're from Blackfin Capital Partners, Neer Venture Partners, Illuminate Financials, and Goose Value Ventures. Right, by the way, my camera is not working properly today, so I'm just using my phone and computer beside it. So that's why the quality is a bit low. I apologize for that. Yeah, anyway, so Nathalie, could you please introduce yourself?
Yeah, sure. I'm Nathalie. I'm an investor at Blackfin, and yeah, we are a fund dedicated to financial services in the insurance industry. And yeah, we typically invest tickets ranging between 4 and 30 million from Series A onwards, and yeah, prefer to take lead positions. Our investment scope is within Europe, and our team is also based in 3 different locations. One is in Paris, the other in London, and the other one in Frankfurt and Brussels. I'm based in Frankfurt, and yeah, thank you very much for the invitation again. It's my second time here, so yeah, very happy to be here again, and I look very much forward to hear all the pitches.
Great, thank you. Happy to have you here, Nathalie. Hugo, could you please introduce yourself as well?
Yeah, first, thanks a lot for having me here today. I work with Illuminate Financial, we're a B2B enterprise tech fund focused on financial services. We're backed by a bunch of strategic investors, namely 5 banks, 3 exchanges, and S&P that we like to consider as a data provider, but it's a little broader than this. And we try to act as kind of a bridge between these institutions and early stage companies to help them find the right nodes within these institutions and ultimately facilitate relationships. We have an early stage fund and a growth fund that we closed over the summer. So investing from pre-seed to Series E, basically. So quite a broad mandate.
Great. Thanks so much, Hugo. Great to have you here. Robin.
Yes, so Robin, I'm running Goose Value Ventures, a fintech investor based in Stockholm, focusing on the Nordics and now the Baltics as well. We do early stage fintech, everything from idea stage up to seed, I would say. Currently, we're just launched our accelerator as well, Springboard, focusing on idea to pre-seed the companies in the Nordics and Baltics to take them to VC investment ready. So yeah, gonna keep focus on that.
Amazing. Great. Thanks so much, Robin. Brian.
Thank you. Appreciate the invite. I'm Brian Neer. I'm the CIO of Neer Venture Partners. It's a seed through Series A stage venture fund. Checks are between 100 and 500,000, and the fund is trying to make 200 investments over the next 5 or 6 years. There are 58 already net of exits. The theme is fintech, so at least half the portfolio will be in fintech, emerging markets fintech as well, and a heavy focus on lending, payments, financing. Prior to this, I was an executive at Morgan Stanley for 24 years after a Wharton MBA, and I ran our global credit derivative product business, global derivatives, some of the lending businesses. So that's my background. Thank you.
Amazing. Thanks so much, Brian. Great to have you here. All right, then, let's get started. By the way, all the people, investors in the audience, you can use the chat to interact with the presenters. If you have any questions or comments, feel free to make a comment using chat. Great. And the first company is Hazon. Samuel, CEO of the company, will present the opportunity to us. Samuel,
Yeah.
You have 5 minutes to pitch, then 6 minutes for the Q&A.
Awesome. Can everyone see my screen?
Yes.
Perfect. Great. Well, look, guys, lovely to meet you. Hopefully we can kick off an amazing FinTech pitch night, and I look forward to your questions in about 5 minutes' time. My name's Samuel Flynn, co-founder, chief exec here at Hazon, and we're building a new revolutionary split payment platform that's set to disrupt the travel payments industry. I'm sure you must be thinking what exactly that is. Well, I'm sure you must know, especially booking your summer holidays this year, credit card, and in particular credit card and cards, are the most popular form of payment within travel. But what you might not know is on average 12% of these transactions fail. Now, they can fail due to individuals entering faulty card information or potentially trying to process a fraudulent transaction. But one of the biggest decline codes is due to insufficient funds. And when you take into account that the online travel industry combined across transportation, airlines, hotels, and accommodation is worth nearly over 2 trillion, you can see that, say, for an enterprise travel business doing in excess of 100 million a year in transaction volumes, that this issue is costing them millions of pounds each and every single year. And part of our platform hopes to address that. We provide the ability for the first time ever for customers to pay with multiple cards at the checkout for the same transaction, recovering transactions that would otherwise fail due to insufficient funds. How it works is through our API, merchants can integrate this service and offer this as a checkout option on their payment page, as you can see here with one of our clients, Egerot. This will then give customers the ability to select this as a payment option, select the number of cards that they would like to split with, enter in each designated amount that they'd like to pay on each card. Hazon takes care of the split payment process and does the initial authorization. And we collect those funds and we pass those funds over to the merchant's existing gateway and acquiring infrastructure. Hazon is currently connected with 40 different PSPs today. But this is not all that we do. We also tackle group bookings, because group bookings forever has been a painful process, not only for merchants, but also for consumers. So let's walk you through an average example. Take, for example, you guys booking maybe a group booking this year on holiday. Normally, one of you will be designated the lead booker, and with that, you'll be forced to pay on one card. And when you take into account, say, my generation, Gen Z millennial, our credit limits are incredibly low, and you might be buying a purchase that's over $5,000, you can see the discrepancy here and the difficulty of getting this transaction through. So we've developed for the same API, a simple product that allows customers to split a payment at the checkout. Once merchants integrate this, you can select this as a payment option. The lead booker, who would be the person controlling that group transaction, can now split the payment, whether this be in equal amounts with each item that's in the cart or with custom amounts, share the link to pay with their fellow travelers, which can be done for a WhatsApp group chat, QR code, email, and text message, and everyone will join together and pay their share simultaneously, offering incremental revenue at the checkout. And so far, in terms of traction, we're off to a fantastic start. We launched with Egerot in June of this year. We've already added over $1 million in incremental revenue today. We're in the final stages for the UK's largest travel agent and European airline group, and we've signed 7 payment service provider partnerships, the logos that you can see on the bottom right hand of the screen, worth up to $1 million in ARR, with 2 more in redlining. And we're really uniquely placed to win in this market, because we actually complement and we complement the existing aggregators out there in the market, which is why we've generated these partnerships with them. But where we complement them is by focusing in particular on group and multi-card payments. And unlike, say, consumer-led solutions like bill management tools or challenger banks that offer split payment solutions, we're focusing on delivering incremental revenue to those PSPs and those merchants by offering these solutions directly at the checkout. But I'm sure you also must be thinking, you guys are very smart investors, right? And you're looking for a venture scale business. What happens if Stripe or Booking.com would just come and copy your solution? My answer to that very clever question is that this will be the best thing that's ever happened to the business, because what it will do is it will force all of the other large dominants and the competitors in that industry to add the functionality. And who are they going to come to? who's already working at enterprise scale and has this solution proven out amongst a number of PSPs, you guessed it, hands in. And this is how we're going to achieve that venture scale. And in the short term, focus is going to be around the travel industry. So currently there are 1,200 airlines commercially to date, over 400 OTAs doing in excess of 50 million a year in revenue. There's also sectors like as hotels and transportation and many, many more. We really want to kill this market and then move into other sectors such as the online ticketing market to allow customers to split bookings amongst concerts, festivals, sporting events and stuff like that, but also into the luxury goods space, furniture and other areas of hospitality. And in terms of my background, I'm a serial entrepreneur. I had one exit as a director in 2019 when I was just 19 years old. My story's been covered by the BBC, FinTech Finance News, and FinTech Times. I'm also a 30 under 30 within travel. And I'm building this business alongside Rao Patel, my co-founder CTO, who's also another entrepreneur that I pinched from a company called MoneyDuct to come and work on this venture with me. My advisory board combines nearly a century worth of travel payment experience, including notable individuals like David Parker, who was the former advisor to the FinTech unicorn Curve, David Birch, Mark Uflin, Paul Van Elfen, Peter Sugarman, and Salt Meyer. And the best part, they've all angel invested in the business. In terms of our funding round, we're looking for 500,000.
Samuel, time is up actually, but maybe just final words before we close. Yeah.
No problem. We're looking for 500,000. We've already got 50% of that committed at 6 million pre-money valuation. And some of our investors include senior executives at the likes of WorldPay, Go Cardless, and Elabon. I look forward to now all of your questions. Thank you.
Great. Thanks so much, Samuel. Robin, would you like to start? Do you have any question or comment?
Yeah, maybe just a quick question first. You say that in sort of your problem that you have 12% of card payments fail.
Yes.
I'm just wondering how this solution helps that. Wouldn't the increase of card payments fail increase if you added multiple cards?
Not necessarily on high basket transactions, which in travel, given the ATV, is incredibly high when applying group bookings, but also other different types of bookings. Having the ability to pay across multiple cards could be the key difference to recovering those transactions.
Okay, I was just thought it was a little bit contradictory.
No, I understand your point of view.
On sort of the technical side, you raised the issue like, what if some of the big tech guys do this? So what would you say is sort of like the technical moat within the platform? I'm just curious, how to protect from sort of like a POS or something, checkout, whatever would do this as sort of an option. Second part to that also, sort of, as I understand it, you do like the payment simultaneously between the people, or do you have like a buy now, pay later layer in between?
Okay, so two things to unpack there. The technical moat, for enterprise businesses, they more often than not do not work with a single acquirer. So they don't solely work with an Adyen or solely work with a Global Payments or a WorldPay. They work with multiple. I think our moat on the technical side is that we orchestrate all of the payments across all of the markets that the merchant might be live with all of those acquirers. So this is a solution that sits as an API layer on top of those existing acquirers. And what that enables us to do is go live instantly in all of the markets that the airline or merchant would have this solution turned on. So just for example, with Air Europa, the third largest airline in Spain, we launched in all of their markets in under a month because of that exact orchestration play that we provide. Also the reconciliation side, because to one of your questions, we are taking a single payment and splitting it into multiple, whether it be for the multiple card or the group product. We have within our API the ability to fetch all of that data and compile all of the individual card payments and reconcile within our platform through the API. This is something and technology that none of the big providers currently have at the moment, and they probably are unlikely to do the orchestration element, given that they're going to want to send more card transactions to their business. So this is how I would say on the technical side that we compete. You mentioned around BNPL. So for the group product, we have BNPL enabled, where if everyone is not at the point of checkout within the allotted checkout window, which for Air Europa currently is 60 minutes, they will have the ability to pay their amount in installments, and we can do that with financing options, and we aggregate different BNPL providers that do the credit scoring, offer and issue the loans to the customers one by one, or we can do that without non-financing options where we set a bridge between the merchant and the user to actually set up the installment payment.
Cool.
Okay.
One final question, sort of.
Okay, and we have less than a minute, by the way.
Okay, I can leave it. I can take it on the side.
Robin,
with,
let's chat offline
brilliant.
if you got more questions.
Yeah, let's do it. Let's do it. Cool. Thanks.
Any more questions, guys?
Sorry, yeah, I saw Brian. Yeah, I guess you have.
I do have one question. So I've seen a couple solutions where you can put a card on top of a few other cards, and then rather than integrating into the payment systems and saying like select, the card will just kind of do it for you with your stuff. Are you looking at that technology at all, where you could just say, okay, you have 3 or 4 cards, they go into one card, now you have a card? Or is there some reason you selected this, which requires an integration?
So would you
be
referring...
short answer for the Samuel, by the way.
Okay. Question back at the question. Are you referring to like a wallet payment?
No.
Well, is something that we are looking to by giving users the ability to just basically create their own wallet, pile all the cards together, and then it will do the split autonomously. So I know I'm short on time, so I hope that answers your question.
All right. Thanks so much, Samuel.
No worries.
Great presentation, great answer. And on the next page, the next company is Ilaas. Lawrence will present the opportunity. Lawrence, feel free to share your screen and start the presentation.
Hello. Yes, can you see my screen?
Not yet.
No, 1 second.
But...
Does that look right?
Yes. Now Now I see the presentation.
Excellent. So let me get my timer going so I respect the times. Excellent. Sure. Thank you very much for this opportunity. So I'm the co-founder of Ilaas, and we are a PayTech SaaS platform. Our clients are lenders that do global factoring and ABL lending. So banks, non-bank lenders. We are solving a major problem, which essentially is the fact that the FinTech world and the PayTech world are 2 separate worlds. They are not synchronized. They are not connected. There's a void in between the FinTech world and the PayTech world. What does this mean? This means that not being integrated, it means that there are missing standards, there's missing software middleware, there are inefficient APIs. This means that a bank or a non-bank lender that's doing global trade finance has to have a treasury that goes online and makes a payment on online banking. This causes delays, human errors, unclear fees, limited scalability, and manual reconciliation. It's a major problem for the entire industry. So we've invented a solution which is fully working. We've fully integrated the FinTech world to the PayTech world. This means that we have, for the first time, real-time cash control and cash dominion and the ability to reconcile information. So we make payments, we reconcile payments in real time, both for incoming payments and for outgoing payments. This means that for a lender, we offer them a programmed waterfall real-time execution of complex fund movements exactly as designed by their mandates and by their needs. And this means that we're creating new revenue streams because we are earning off the bank fees, and we can share that in a revenue sharing model with the originators that onboard and exploit our platform. So we're talking about a huge industry. Factoring in ABL, the TAM is 4.6 trillion. The SAM is 95% of that because there are no limitations on geographies or this limited, the very little segmentation limits. The SAM in our case, we believe is 2%, 88.5 billion. So we're talking a very large industry, which does not have a solution like what we have. So we expect a growth potential of 244% per year. What's the technology doing? What's the uniqueness? We have intelligent cash control. We create virtual IBANs. We dedicate lockboxes. We manage automatically the pay-in and the payouts. This means automated reconciliation, eliminating potential human error, providing instant reconciliation. So our clients can do audits to a bank in real time, which is unheard of. This means we can onboard globally clients and originators and lenders on our platform very easily with great API flexibility. We connect into existing platforms, so into loan servicing software, into factoring, invoice discount. We plug into solutions, avoiding any kind of overlap and providing programmatic contracts. What does this mean? That by automating payments and purchases, we prevent problems. We don't allow them to happen and then we fix them and correct them later. We avoid them. So we believe in prevention rather than correction. So we earn platform fees recurring on the invoices, transacted invoices, bank transfers, international and domestic, with very high gross margins, 95% and 80%, with standard pricing for all our clients and volume discounts when available. We are a spin-off of Lenderwise. So the platform has managed over $765 million in the last 2 years. Prospective clients are alternative lenders, non-bank lenders, fintech platforms, and originators. We already have strategic partnerships with insurances, credit collection agencies, servicing agencies, credit reporting, credit analysis, EMIs, AML, and KYB service providers. The system, as I stated, is fully functional. We have our first revenues. We have 700 potential clients identified on our CRM. We aim only at 15, giving us 20 million each, meaning 300 million in transactions within 3 years. It could well be 5 times that. So this is very conservative. We expect to have strategic partnerships. All of you actually are potential strategic partners, because I'm sure you know banks and non-bank lenders and factoring companies that could benefit from our risk mitigating services. So we fit in between the payment processors and the fintech platforms. I won't get into details because it takes too much. I don't have the time. But it means we're automating cash movements, automating portfolio management, cash dominion inbound, outbound payment engines, and what have you, with a fantastic team, international law, international finance and tax, corporate banking, a fantastic CTO, and a lot of experience. The goal is 300 portfolio on our platform. That means 12 million revenues, 2 million OPEX, an EBIT of 10 million. So this is also very highly profitable. We are asking for 1.5 million at a 30 million valuation based on we have companies that want to buy our platform already, in addition to actually using it as a service. We expect our net present value to be worth at least 200 million, if not 5 times that. So your investments will have high returns. We'll use these funds for IT, AI development, operating expenses, and OPEX, and what have you. So we're a high-tech SaaS platform for lenders. Thank you very much.
Great. Thanks so much, Lawrence. Nathalie, would you like to start this time?
Yes, thank you. I mean, I would be curious because you mentioned that lenders now, they lack the real-time, like, kind of cash control over fund movements. And I'm wondering, like, how is it working now? Like, I mean, how far is real time like at the moment, or how does it work now? What's the status quo?
So your voice is breaking up, at least for me. What I understood is you're asking, how do lenders do this business, this activity right now, if I understood properly? So 95% of non-bank lenders right now have a treasury that will purchase an asset, like an invoice. Then they have to manually go online onto their online banking, insert the data on the invoice, the currency, the amount, and any other kind of data associated with that. Online, go back to the fintech platform, put that data into the loan servicing software. That means a time gap. That means they can make a mistake. That means they can be caught up overnight with other things. That means that data cannot be reconciled in real time. I have integrated both the outgoing payments, so we purchase an asset and it's instantly transferred. And likewise, we create a virtual account for our clients. They put that virtual IBAN on their invoices. When the debtor pays that invoice, we capture that information automatically. We allocate it to the supplier, the client, the lender, the interest wallets, all of this is automated. By automating this, not only do we offer real-time reconciliation, but we have the ability to block things if there are mistakes, and to make sure that whatever the mandate by the lender, whatever his requirements are, that we make sure that that's programmed automatically into our system, so there can't be human discretion, there can't be human mistakes, and there can't be human delay.
Okay. Thank you very much.
Thank you, Nathalie. Hugo, do you have any question or comments?
Yes, one comment and one question. First comment on the multiple that you put for the valuation. 20x is the highest multiples we see for the best businesses with 95% gross margin or this kind of thing. So I wouldn't take that into account. On average, it's closer to 10. So pretty massive
I'm
gap.
saying that on. Yeah, sure.
So yeah, that's the common part. And I saw you put with 300 million on the platform, you put 12 million in revenue. You said that you have 2 streams. Like what are the percentage exactly? Like, is it 2 and 2 or like?
Essentially,
And
by
how
2 and
did you
2.
think about the pricing models? Or because I get how you unlock new revenue streams, but if you take cut a lot of it from the customers, then what's the incentive to adopt?
Yeah, so essentially we see a fee for the lender and a fee for the borrower that are using our platform. Essentially, on average, 0.17% per month for each. So we consider that a very competitive rate because we're looking at very large volumes. The second revenue stream is actually on the actual bank transfer. An international bank transfer can cost as much as $80. And we've seen this in many cases. We are charging $15. So we are giving extremely competitive rates for international transfers, and we have an 80% margin on that. So, the revenue streams are recurring based on invoices that are being transacted on our platform and on the actual transfer of the value of the purchase of those invoices.
Okay, and just so, how do you offer these prices? Because I mean, I guess you're not using Wise or something like this to process the payments.
So we have multiple EMI providers. It's taken us a couple of years to find the right ones. There are big boys out there that do not work. I'm not saying this about Wise, but there are, unfortunately, in the paytech world, a lot of talkers. And unfortunately, when it comes down to actually using the APIs typically do not pass all the information that's needed to be able to reconcile in real time. So we have backup multiple providers, allowing us to provide the service on a global scale. We actually can serve 190 nations. Right now, we're working with clients in 25 nations. So the technology is actually based on a concept of multiple providers so that we make sure that we don't have all our eggs in a single basket, which can be a problem.
Understood.
Wise would probably want to buy us in a few years, is my expectation.
Okay, interesting. Thank you.
All right. Hugo, anything to add or? Okay.
So essentially, the platform we see is extremely useful for banks and non-bank lenders, for big tech platforms that want to better manage their funding and lending facilities. Because it's a risk mitigating tool which allows them to save money, to earn money, to optimize their front office, their back office, and to be more scalable. So it's a safer way to deploy funds, a faster way to deploy them, and we believe a essential tool for any bank or any non-bank lender.
Amazing. Thank you so much, Lawrence. And time is up. Great to have you here with us.
Thank you very much. Thank you very much.
All right. The next company is Torus. Kirill, founder of the company, will do the presentation. Kirill, feel free to share your screen.
Yep. Hello, I'm just sharing that. Yeah, you should see it now. Hi, I'm Kirill. I'm the co-founder and CEO of Torus. So we are the SaaS intelligence platform for banks and fintechs. In a nutshell, helping them to enhance their card payment profits. We focus on the scheme fees and interchange, mostly scheme fees, which payment schemes are charging from issuers, acquirers, and then they inherit and down the payments value chain to merchants. And so we help them to better analyze them, optimize them, and predict them in order to optimize their profitability by better pricing their products, their customers, and so on. So as Samuel, for example, mentioned from Hazon earlier today, that a single purchase may result in several card transactions, which is good for the approval rate, but the bad news is that it will create sometimes proportionally, but usually even more than proportionally higher fees that acquirers and in the end merchants will pay for their transactions. And why is that important? Because on the one hand, when you look at the card payments, so it's still globally kind of dominating the cashless payment, retail cashless payment industry. So there are roughly like 30,000 card payment players globally, which generate more than $500 billion of annual revenues. And these revenues keep growing double digit. On the other hand, the space is becoming more and more crowded. So competition is growing, so are the costs. So in order to succeed here, you need to be competitive yet profitable at the same time, which means you need, as a payment player within like low margin transactional business, you need to very accurately manage your P&L items, especially when it comes to the transactional costs. And one of the gray area there is the scheme fees charged by Visa MasterCard, which are quite cumbersome. They're becoming more and more complex, and on average, acquirers, issuers do not fully understand them, and they cannot predict them, and it causes some problems to them. It causes some lack of understanding, and and this lack of understanding and this confusion costs them billions per year. There are two parts of that. The first, that they are overpaying the fees without really understanding what they're paying for, instead of really looking in depth, can we optimize there something? And second part, that they might be having so-called profitability leaks. So they might be having loss-making parts of their transactional business, but right now they just do not know that because they cannot calculate it down to a single merchant level or single product level, because the data that they're getting from the schemes is already aggregated at portfolio level. But there is that if payment players could deal with the data, with existing data streams better, in the end, they could improve their profitability, bring more transparency to the market, and also optimize their pricing for their customers and their products. So Torus is the SaaS plug-and-play solution for that. So as an input data, we take the same raw data that our customers are getting from the networks, from the schemes, MasterCard, Visa, and others. And then there are a set of pre-built use cases on the platform, analyzing the cost of the invoices paid, helping them to optimize those, predicting the fees at transactional level on a daily basis, helping them to really calculate unit level profitability, to run profit-based pricing like interchange plus as a service, and also reconciling the data between different sources. So in the end, we help our customers to decrease their costs and improve their revenues, and by being more competitive in the market and having a more tailored pricing of their products according to the market needs. And you already have some early adopters, mostly in Europe, but also have some footsteps in Asia, Central One plus Japan. And they're already realizing of something between like hundreds of thousands up to millions of annual cost savings using our platform, but also they realize double or even triple digit profitability improvement by, again, getting these profitability analytics down to single transaction, single terminal, single merchant level, and optimizing pricing through that. Our advantage is that the team that we have on board used to work a lot in the space. So we productized decades of experience and decided that instead of doing consultancy, we would rather put a product which can be globally applied, and we're scalable geographically because the raw data, the formats are the same by the schemes in each and every market they operate. And we right now taking the product from the kind of home region where we started in Europe down to other regions as well, using different sales channel, including partnerships. So right now we're securing a partnership with Big Four company in Middle East to cover the whole region, for example. Overall, we're targeting mid-market. So the idea, the mission that we enable mid-market players in the card payment space to get the same level of insights as are usually available just to the largest ones, which invest millions in this area. So we estimate our target market is around like 20,000 players globally. Also, they're more open to buying SaaS solutions rather than investing in building in-house solutions. And these are banks, non-banking institutions, but mostly the ones directly connected to Visa MasterCard. We are SaaS business, so we charge our key revenue stream is subscription fee. The average annual ticket is around 100K. We also have some one-offs when we're doing a pilot, we're doing some specific customization, but roughly like 85% of the revenues come from subscription fees. We now have 10 customers across Europe and Asia. We're cash positive since around like mid last year. We were named the Startup of the Year at MP, so Merchant Payment Ecosystem, one of the largest and eldest acquiring and merchant conferences in Berlin last year. And you also were part of MasterCard Lighthouse program last year. And so now we're kind of pushing more in terms of sales in Europe, so leveraging already existing relationships, plus also testing the ground in new regions and trying to do it efficiently by using some partnerships and so on. Revenue-wise, right now we have around 1 million ARR, and we potentially looking to start a kind of late seed early round around like second half of Q4 this year in order to close it around like Q1 next year to fuel up our further growth in existing regions, but also in the new ones.
Great.
So that's it in short. Yeah. So yeah, let's make data payments really data-driven business because right now, unfortunately, it still have a lot of legacy.
Thank you, great presentation. Brian, would you like to start?
Yeah, sure. Thank you for the great presentation. I guess kind of two questions. One is, can you give like a layman's example of exactly what kind of thing you're helping these folks save money on? And the second part of that question is, for banks in particular, particularly larger ones, probably have some of their own analytics. Can you describe how your solution is different and how big up on the enterprise scale you think the solution's going to be effective?
Yep. So on the cost savings, so there are like two current products that we have right now. So the one is more focused on the cost savings. So we take the invoice and help them to really desegregate it down to single fees, what they're paying for. And our examples could be, hey guys, you're paying penalties for years without realizing that actually it's penalty because it's not explicitly called penalty in the invoice. So average invoice by scheme could be like hundreds of PDF pages or like hundreds of lines in an Excel spreadsheet. Other examples could be that you're using some pro version of some non-mandatory report, which was ordered as reality typically shows by someone like 3 years ago, and now you're not using that, but you keep paying for that. Do you really need it? Or you can opt out and save, let's say, like 50K a year, and then there might be dozens of those small items. So this comes up to something between like 3 and 10-15% of annual cost savings. Well, this is about the costs, but also when we talk about profitability leaks, the most obvious use cases for acquirers. So you have like 100 merchants or 1,000 merchants in your portfolio. Majority of the acquirers right now manage their portfolio at portfolio level because the invoice which they're getting in the end of the month by Visa and MasterCard, they're aggregated at portfolio level. So each of those hundreds of lines is already calculated using all transactions for that period. So in order to allocate the cost down to a specific merchant, basically the only accurate way to do is to recalculate it from scratch. And then the largest players in the market invested a lot into that. Like ADM invested something around, they told me around like 10 mil into that and spent almost 2 years trying to set up all the things. And now they have a team of 20 people just supporting that stuff. But mid-market guys, they typically either try just to take the average, and the fees could be fluctuating like 10, 20 times depending on the type of transaction and size and things like that. So that's why we say to them, hey, we can help you to calculate really transactional costs on a daily basis based on your transactions. And then we keep it at transaction level. You will really know what's your margin on this specific merchant, and if needed, you can reprice them, or if they're loss making and they don't want it to be repriced, you better offload them because otherwise you just lose like X cents on each dollar of transaction there. Coming to the second part of your question. So yeah, we typically mostly focusing not on tier 1 guys, but on the tier 2 ones, because they're, at least at this stage where we are, they're a bit faster to move. Plus, I had some discussions on some conference with guys like Bank of America, for example. They say, hey, yeah, we have a large department doing that. And then they really need to want to have a look, can we as Torus do better than their internal force? And there are a lot of politics will be around that. So that's why we typically come to those who feel the need for that, and usually they are not the largest ones. So we wouldn't touch on tier 1, but we rather go to tier 2. But they are also principal members of Visa MasterCard, so they have these problems, and they are large enough to feel the pain. But typically, they are not large enough to invest millions and years into building a solution for that. But
what's your pricing model?
The pricing model is a tier-based SaaS. So there's one setup fee in the beginning, plus then there's monthly or quarterly subscription, depending on the size of the player. I said the average ticket is around 100K. We have some few of them which are a bit higher. We can start The minimum that we start, if it's just the one product, would be around like 40-50K a year.
Thank you.
Okay, thanks.
All right, thank you. Maybe we can have some comments, feedback from the advisors, since we have just a few time, less than a minute. So maybe Hugo, do you have any comments?
Yeah, just got a quick question. Because, and by the way, correct me if I'm wrong, because my numbers are not super precise, but if I recall correctly, there are around like 3 billion credit cards in circulation, including 1 billion in the US, and I think out of this billion, it's like more than 900 million from the top 10 providers. So Citi, Chase, Bank of America, and yeah, all these big retail banks. So what do you think about market size if you get all these guys down and the ACV is around 100K?
So when
like, yeah, what do you think about market size? Because the price might be a bit low to, you know, get a pretty big market size.
And
Yeah,
we
yeah,
need
so
very short answer for that, Kirill.
Yeah.
Oh,
So that's why I would say that out of 30,000 players globally, so 20,000 are these kind of excluding the large guys, and we estimate if we charge like 100K. So yeah, it's not. So we're not building Google, but we believe that it could be like, you know, a couple of billions. And also we're going down the value chain. So we just launched a solution for merchants, which is typically other market. We just have an MVP and testing that because we see that they're also crying for transparency, and we can balance the whole market in the end of that.
Yeah, great. Thank you so much, Kirill.
Yeah.
Great presentation,
Thank you.
great answer. All right, and the next company is Greengage. Sean will present the opportunity. Just a quick suggestion for the remaining presentation. I suggest like you keep your answer a bit short so that all advisors can contribute and you will answer more and more questions, and all the investor in the audience will be more informed. That's a quick suggestion. And Sean, your turn right now.
Great, thank you very much. My name is Sean Kiernan. I'm the founder and CEO of Greengage. We're a Web3 FinTech, and I'm just sharing the screen, so 1 second. What we do is two things. We offer accounts and lending to our clients. And our accounts are generally SMEs, crypto companies, and family offices. We've gone live with the e-money accounts last year. Credit is where we've actually had a focus. We've done over $250 million of lending as a platform, with a focus on crypto collateralized credit, working with family office partners as balance sheet providers. We built our own tech, which is largely built on Azure and Salesforce. And we've recently announced a Coinbase collaboration to build SME private credit on a tokenized format, shifting our focus on debt just from the purely crypto collateralized also to working capital requirements for SMEs. Projected revenues for this year are just over $1 million, and we're currently raising $2 million to fuel growth. In terms of our platform, we are not regulated ourselves. When I say we're a fintech, we're working with regulated partners for accounts. We're currently working with Equals Money, which gives us over 50 fiat currencies, but we can operate on a crypto-friendly basis as an on or off ramp. And in terms of our balance sheet, we plugged into several family office partners that pay us for originating credit by connecting borrowers and lenders. Coinbase is a bit of a step change in that we're the first user globally to be scaling on their Diamond protocol, which is a tokenization stack for real-world assets. The team is, including myself, two co-execs. I've built a bank before within the Credit Suisse group. My COO, Ian, was previously at Goldman and Newman, and Daniel, our CTO, has built fintechs before as a CTO, particularly in the credit card space. Our investors have contributed $8 million to date. This is largely gone into our tech stack, but also go to market, and 2 institutional investors and quite a few PA tickets from reputable firms, from MDs. We see the gap in the market primarily in the SME space. Obviously, they're a big sector of the UK economy. We're also operating in Europe on a reverse solicitation basis, and we've just opened up an office in Abu Dhabi as part of the Hub 71 program, where Greengage was one of 21 companies accepted out of over 1,000 applicants for submissions. But the UK is our home market, and what we see here is that not just a debanking theme, but also a de-lending theme, where SMEs are not getting the credit they need from banks, and private credit has stepped in to fill that to a large extent, with fintechs maybe as origination partners. One of the issues that we see with private credit is that there's a lot of efficiencies that still can be achieved on the middle and back office, and also in cutting out the hops between borrowers and lenders to have closer discovery and ideally better rates, which is what we're looking to do. SMEs post-COVID are still looking for additional access to credit. We focus particularly on working capital requirements, invoice financing, for example, is where we're looking to pitch. What we're doing with largely the raise is building what we call a smart data room. In a Web3 environment, we see two sustainable things that we're focusing our business on. Those are relationships and data. And we see the static data obviously is now standardized with a lot of the fintech lenders, but the dynamic data is where we think we have an edge. With blockchain, we're able to open up different interrogation of data, quality of data for more multiple actors. And we see ourselves as building a moat around that piece particularly. In terms of the market landscape, we're a bit of a Coots Revolut hybrid, if you will. We do have personal relationships, but we do that on a scalable basis, and we're using the tech to accommodate that. And we see crypto and Web3 as our way to differentiate versus competitors. It's actually a very simple product with e-money accounts. The difference for us is that credit access. We don't see many account providers also offer lending as a platform. And we see Web3 as a place that we have unique insights into, and our tech is driven by that API first mentality. In terms of where we are today, I've already mentioned we've done over $250 million of lending. We've done hundreds of millions of payment volume to date with partners, and we have some great feedback from our clients. We're looking to scale, particularly on the lending side, in due course. Here, our average ticket size is over 5 million per loan. So we're not operating at, I would say, the high volume end of the market, but rather the high value added end of the market. Diamond, just to kind of drill into that, is this fairly, for me, fascinating platform that Coinbase has built. We've been in the background discussions with them for a long time. Coinbase Asset Management historically was called One River, which is where we got to speak with them originally about the SME lending case. We're looking at launching this initially in ADGM, where Coinbase is regulated with the Diamond protocol. Effectively, this is a CST, which is what the blockchain can deliver, a very efficient backend settlement. And what we're doing is looking maybe at a Bank of England digital security sandbox joint application with Coinbase. Our accounts are, I would say, medium price at 5K per annum. This is quite competitive in the crypto-friendly space. We have drop fees for higher touch services for SMEs in the lower risk category. For the kind of loans we're raising, say 1 to 2 million in the pilot phase, 5 million is what we're doing on the crypto side. These types of fees are not really an issue, but they are definitely not the tide end of the market. We're looking at more higher value companies, 1 million plus. The way we've done this is by stitching together on our tech stack the different services. So we have different balance sheet providers for credit. We have different payments as a service providers, and we also have different services as needed to give our clients value. We try to sit on the same side of the table as our clients to deliver that added value, and using tech as a way to do that.
Sean, sorry, I have to stop you there. Time is up. I'm sure you will talk more about in the Q&A part. Robin, would you like to start? Do you have any comment about you think about the presentation?
With the risk of maybe looking stupid now, I was trying to follow a little bit what the link was between sort of the Web3 side and the SME lending side a little bit. I'm sorry, I'm just trying to piece that together. It was a little bit like I heard two pitches at the same time. So please, if you can help me with like what's the link? Why that infrastructure linked to that problem why does it make sense?
Sure. So there's something that's come around the last couple of years called tokenized private credit, and there's a few platforms that are offering this today. Maple and Centrifuge, for example, are names that take SME debt, real world assets, and tokenize that with a view to distributing it a more efficient way to balance sheet partners. We see this as a subprime market, primarily with the existing providers offering fairly high return rates, and they're pitching more to the crypto native audience, looking for that high yield but high risk. Our end of the market that we're very much focused on is, I say, prime-ish. So it's the traditional SME working capital market. We're looking for using these technologies to maybe shave off some of the cost of the borrower so that we can connect more closely the borrowers and the lenders. So it's using these new technologies, but bringing into the real world. And we see, for example, stable coins as one of the killer apps that traditional businesses are now engaging with cross-border payments real time using USD-backed stablecoins. This private credit piece is another that we think is the killer app, if you will, for the debt markets and can address that gap in the SME funding space.
Okay, cool. That makes more sense. Sort of just from investor point of view, and my experience, I've been part of building multiple lenders. So to say, I think it might be difficult. Maybe that's just me to sort of combine these two from an investor point of view, because you're sort of taking one risk on the technical side and sort of other risks and growth drivers on another side, on the lending side a little bit. It's like quite two different.
I completely agree. We wouldn't be able to do this without Coinbase. So we're using their technology for tokenization. We're not building that. We can. Our focus is on the origination. So we needed the account to have a funnel to have the data. But we see that as our edge.
Okay. It might be good to sort of clarify that a little bit in the pitch deck and make it a little bit lighter, especially when the more complicated things you have that you're working with, the more simpler the pitch deck has to be, in my mind. It's like just to get that, nail it from like the first page. Otherwise, it's a really interesting space. I'm happy to answer questions if you have anything around sort of the lending space as well. Thanks.
Thank you.
Thank you. Thanks so much, Robin. Nathalie, do you have any comments or question?
Yeah, actually, I'm wondering whether you build your credit score yourself, or are you using like any third-party providers? And also, what's the like average rejection rate?
So we have, in historic terms, this crypto collateralized lending, it's all over collateralized. So it's a different kind of market. This SME lending that we're now using our tech to move into. The private credit world is actually our proxy. And here the likes of Ares reject 95% of the deals that cross their desks. We're looking at the same ratios roughly, but our focus is to originate as high quality as we can. And we already have a pipeline of transactions. The initial pipeline is 1 to 2 million tickets. Given the partners we're signing up, which are a few credit funds, we've got some MOUs in progress, and Coinbase potentially is going to be able to deploy some capital itself. And our job is to be the Sherpa, if you will, to help SMEs navigate the stablecoin backed lending, but with the view that they get maybe a better rate than off the back of that. So we're looking at invoice-backed short duration loans as a focus.
Okay, thanks.
Sorry, I muted myself. So I was saying, do Robin, Brian, or Hugo, do any of you have any questions?
Yeah, I had one question. I couldn't tell in your description if this is like a marketplace where you're trying to get the two sides going and saying, listen, this is where you do stablecoin based, smart contract, private credit, or if you are lining up funders and then going out and trying to make that funding available to people and taking a rip. I couldn't tell which one of those it was, or if it's something else.
Yeah, so it is a marketplace if I can classify it as that, but the end that we see as the harder end to fill is the origination piece. If we bring high quality private credit to the table, there's a lot of money that's looking for that. And that's what we're doing in the pilot stage. So there's credit funds that are signing MOUs to engage. One, because they're curious about the technology, they want to get their heads around it. A few credit funds have appointed heads of tokenization, for example, because they know that it's not the B2B space that really benefits from tokenization, it's the CLO. As soon as these are securitized and kind of scaled, that's the efficiency. And so they're curious to kind of discover now, but our long-term creation of the pipeline, we will have to scale ourselves into having perhaps our own credit fund or some way to participate in the margin. But for now, we're acting as a marketplace.
Great. Thank you, Sean. Great presentation, great answers. Now we will move to the final presentation. Thank you so much, Sean.
Thank you.
And now we'll give you the stage to Simon from Kvikk for securing. I hope my pronunciation is not too bad.
All good, all good. It means Kvikk Insurance. So just so you know, so it's just a Norwegian name. Thank you for your intro. Let me just check here. Where is the share screen button here? There it is.
It's in the middle.
Can you see the screen now?
Yes, we do.
Okay, all good. So 2018, I was at the airport in Bali and my flight was canceled. I knew I had insurance, but none of my friends knew who to call, where to file a claim, or even if they had insurance. No one knew. And that's the problem. 50% of us travel without insurance because they perceive it as complicated, inaccessible, and expensive. And 4 out of 5 wants to buy insurance through an app. My name is Simon, and this is exactly why we created Kvikk. Kvikk is making travel insurance simple, fair, and personalized. The whole customer journey takes place in the app. You purchase in the app, you can file a claim in minutes and get immediate reimbursements. And the coverage and insurance certificate is always just 2 touches away. And this is how it works. You pay for a fee for coverage inside of Norway and the risk you take here, and then an extra charge when you actually go abroad. So it's a real-time insurance tailored for your travel habits. So let me show you how it's done. You're insured in your resident country all year round with an annual product, and all the information about the pricing is in the app. But when you do go abroad, our app notifies you that you reach a new country and about the cost at your new destination. This is all automated and making your trip hassle-free, knowing we take care of you. And while you're out there enjoying your trip, we count each day you're abroad, making sure you only pay for exactly what you need. When you go back home, your payment is due for the exact number of days you have been traveling and the exact risk you actually took. So it's a tailor-made insurance for your travel habits. So for normal travelers, Kvikk will be the cheapest option. In terms of the market, the Norwegian travel insurance market alone is worth 350 million euros. The global travel insurance market is valued at 22 billion euros as of now, but is expected to triple in the next 6 years. So our timing, it couldn't even be any better. In terms of competition, there are no B2C insurtechs or neo-insurers in the Norwegian market. There are some in Europe, in the US. You got Lemonade, you got GetSafe, Hedwig, some larger successful insurtechs, but none of them have done travel insurance so far. And there are several large players offering travel insurance through MasterCard or through normal insurance companies, but they're all struggling with old tech legacy, and they have no personalized or mobile solutions like we do. The team, we are 2 founders with InsurTech and FinTech background. We also have 5 industry experts in our core team and board with experience from InsurTech, neobanking, and banking, with over 18 to 25 experience in the extended team in the board. In the last year, we have received a grant from Innovation Norway on 500,000 kroners, so 50,000 to 100,000 euros. We graduated the Tenity Accelerator program, a FinTech dedicated program, which is a top 25 global accelerator. They've also done a soft commitment on 2.5 million kroners, so 250,000 euros. We are now also licensed by the insurance agency as an insurance agent, an agent license that can be transported all over EU. And we have a massive deal with the biggest digital insurance provider in Europe named Wacom, which also gives us access to 32 countries in this partnership. From this partnership, we retain a 15 to 25% commission on all insurance premiums sold, mostly coming from monthly recurring revenue and on-demand charge when the customers are actually traveling. In the later versions, we will also add on monthly subscription models, providing customers with AI-driven travel tips to their exact locations, automatic reimbursements on flight cancellations, so you don't even have to file a claim, and also access to airport lounges if the travel is delayed. We will also get commission from distribution partners, where we split the commission with airlines, hotel booking sites, and other digital providers. Our go-to-market strategy is suited for the young customers. We're targeting Gen Z and millennials. So we've signed a partnership with Horde, a personal finance app, financial app here in Norway with 500,000 users. We have influencers, travel influencers, signed on to tell the customers about Kvikk Insurance. We have partnered up with student organizations, and we also are launching a referral program where you recruit a friend and both gets 25 euros on the voucher with traveling for an airline. Have had big successes for insurtechs in Denmark and fintechs here in Norway. And we also have we want to launch something called insurance as a gift. So you can give insurance as a gift. To wrap it in a digital nice paper, and you send it insurance to your son, to your daughter, to your travel buddy when off to traveling. So the investment case, we're looking for a total of 250 to 300,000 euros at a valuation of 2.5 million euros. We have one angel and tenancy already committed. With this, we will finish developing the MVP and launch the product, taking us from pre-revenue to revenue phase. Once we get a proof of concept inside of Norway, we want to add on single trip insurance and home content insurance through 2025, and then expand to the UK in 26, Germany in 27, and by 2029, we want to be available as a pan-European insurance solution, potentially reaching all of EU citizens. So please join us in making Kvikk the ultimate travel companion, and together we may be changing the world of insurance. So thank you.
Thanks so much, Simon. Great presentation. Hugo, would you like to start? What do you think?
Yes, just got 2 questions.
Yep.
First one, again on market size, is it the amount of premiums written by insurance companies around travel, or how do you calculate it? Okay.
Correct. Yeah. Correct.
Okay, and so I used to work with a company called Lenderwise, which is a B2C insurtech company. I had invested quite a while ago actually now. And the struggle was around the cost of acquisition of customers and actually the price that they were paying. And it was just so hard to make the numbers work. So have you thought about the cost of acquisition in the region and how it would grow if you expand? And by the way, the company is still not profitable, but close to it, Lenderwise, and they almost died like Hugo did. Because it was running out of money.
Yeah, we're aware of that. That's the biggest challenge in the insurance space. You know, it's actually hitting the customers, and I know the customer acquisition cost is around 500 euros for a typical insurer. We're aiming to do that in 1/5 or 1/10 of that. And I think one of the key things you got to do with insurance is put it in the front. Right now, insurance is just way back there. You never think about it. We want to make insurance also relatable when things also go right. So we have to interact with them when things go right as well. That's why we want to communicate them when they're actually going out to travel. Let's say when they enter a more dangerous area in Barcelona, you can send a push notification that says, "Hi Simon, be careful now. You watch out for your wallet and your phone." We think this is the way of putting insurance at the very front foot. And we also want to brand it differently than the way people do today. It's all about don't do this, don't do that, and more like a scaring approach. We want to do like the things that Red Bull does, focusing on the positives of traveling. Go have fun, go do that. Go do that experience that you want to do, and we got your back no matter if things go wrong, if things go right. So we want to really have a different brand than the most of the other insurers have. You see the coloring and everything. Also, it's really red. It's challenging. It's not like that typically safe feeling that the typical insurers try to give you. We want to have a different branding approach.
Oh, understood.
Thank you.
Yeah, thank you, Hugo. Brian, do you have any questions?
Yeah, sure. 2 things. One, who are the insurance providers you're working with? And are you thinking about doing any of your own insurance? And then the second thing is, like, what's the normal channel where this addressable market usually goes through? Is it usually attached to ticket sales and other things like that? And then the demographic, like age of your user versus normal user.
First question, our insurer is Wacom, insurer from France. We want to focus on just having one insurer to start with. Maybe we'll have more if they can do more added on products, like you could do extreme risk at the certain dates that you're traveling on, and you can just add that on. But for starters, we want to start with Wacom because we can go all over Europe with them as well. And the second part of that question, the demographics are 18 to 35. What was the first part of that?
What I'm trying to figure out is, like, you said there's a big TAM. I think it was 22 billion. It was some huge number, right?
Yeah.
Is that usually sold along with an airplane ticket or along with something, and you're trying to go into a totally different channel, or?
Yeah, that's the total travel insurance premium globally. So that's through a lot of different channels. So that's through just D2C approaches and aggregators, and also through airline bookings. But most of that market is coming through single trip insurances, and what we have is the multi-annual trip insurances, where you have multiple trips during the year. So those are the two that goes for around 60 to 70% of them, and the rest is through booking sites and so on.
Great. Are you thinking about doing the insurance yourself at all? Like, what's the normal payout ratio? My understanding is this type of insurance is exceptionally profitable. So, sometimes maybe worth considering.
Yeah, if it comes to that, I think it's important to not have too much in-house as well. Because if you see some of the insurtechs that have died out, they have a lot of people inside the company. They want to do the product development themselves. They want to do the tech development themselves. They have a lot of things they want to do themselves. I think we got to get a proof of concept first, make sure we get this right, both in Norway and in other countries, and then we can start thinking about becoming an insurer ourselves. But first off, we want to start as an insurance agent, and then we can move on when we see that things are working out. That's when the timing is right to actually consider that.
Thank you.
Thank you, Brian. Nathalie, do you have any comments?
Yeah, just a question of understanding. So you mentioned that like your clients would have an insurance like when they're in Norway, and when they travel abroad, it would kind of start the whole insurance package. But what happens if you get sick, like before a trip?
Before a trip?
Yeah, exactly. I mean, you're still insured, I imagine. But,
yeah.
And also, okay. And then maybe also another question regarding your distribution channel. Like, are you also planning to go more into B2B? So are you maybe also planning to go to like credit card companies? Because I think most of them, they already offer like a travel insurance. And yeah, also like, did you think about like going to like business travel platforms directly? Because like targeting Gen Z is probably not the largest market, I can imagine.
Yeah.
But I mean, you probably did more of the groundwork, but yeah, just curious on your thoughts about that.
Absolutely. You could do both of that. So this is leisure travel for now, but you could also do business travel, because for businesses, this would be a cheaper solution as well, because then you just pay for the amount when you actually do go abroad, and just all the employees download the application, and you then you charge for how much they actually traveled for that year. So it's definitely something you could do down that road as well. When you're talking about B2B solutions, absolutely. I think you could also white label this into countries we're not entering ourselves. So there's a lot of things, actions to where you can go. But what we've been talking to potential white label solutions, we've been talking to MasterCard in the UK, but everybody wants to see, you got to prove that this works at a certain level. So this is the way to go to actually get this going and start, and then we can continue that dialogue and reaching out to all of that different aspects, because you can put insurance a lot of places now, to get that to get insurance out there at the point of sale.
Interesting. Thanks.
Thank you. Thank you, Simon. Robin, maybe if you have any comments, maybe not question because time is already up, but we can hear your, comment, what you think about it.
Well,
if you have any.
Yeah. I know Simon since before and Kvikk, so no, I think it's an interesting space with the insurance, and we have some experience there. I think it would be interesting to hear just one comment on the technical side and where you're going forward, especially with the next steps for products from travel insurance going towards, what's the next product that you're going to be able to launch?
The next product will be single trip insurance, where you just purchase for those actual days, and also home content insurance. When I say home content insurance, I'm talking about valuables you have at home, or couches, TVs, computers, your clothing, all the stuff like that. And the Gen Zs, the millennials that live together now, they also usually have their own individual home content insurance. We want to combine that so they can recruit each other. So let's say you and me live together, Rob, and I say, okay, I send you a code, and you activate on that code, and then we both get cheaper insurances because you share a lot of the valuables, and you have like a flat fee for like water damage and fire damage, for instance. But I own a bike, so I pay additionally 1.5 euros. So you have like a personalized individual solution for both of the people. Then you also will recruit the other guy you're living with. So I think this is a way to reach out and do insurance a smarter way to actually reach out to that younger demographic. So that's the next product, but we also always want to build products that's easy-mindedness and that's easy to understand, and that's fair, and it's your type of product. It's individualized, it's personalized. We don't want to do more standard products. We want to innovate on the product side, and that will always be at the core of this.
Yeah, great.
Thank
Thanks,
you.
Simon.
Thank you, Robin. Thank
Great
you.
presentation, great answer.
Thank you.
All right then. So just before we close, maybe we can hear some final word from our advisors, maybe what they think about startups that pitched today. Brian, would you like to start?
Sure. Look, I thought the pitches were great. If this is I thought most of you got to the main point of your presentations pretty quick. They're all highly credible businesses, wildly different valuations. There was one where you said it was 2.5 million. I was expecting you to say 10. There was another one I was expecting 10. You said 30. So like those were all over the place. But I think making sure you get your key point across, what you did, making sure that there's a good view of like what's revenue, how's that connected to valuation. I think some of those were more clear than others, but all in all, like several, 4 very credible pitches, all interesting, all things that are the kind of stuff I look at in my portfolio.
Thank you. Thanks so much, Brian. Thanks for joining, Nathalie.
Yeah, I totally agree with Brian. Thank you so much for the pitches. It was super interesting what you were all saying, and I think you, also like answering to the question, you all managed to do it really well. Thank you very much.
Thank you, Nathalie. Pleasure to have you here. Hugo.
Yeah, thanks a lot for the pitches. One quick comment I would make is I think at this stage the investments are mainly about the team. So yeah, I would probably emphasize that a little bit more. Like, why are you the best team to build that? And why would we back you instead of anyone else? Because I think that's what investors are mainly looking for at that stage. But yeah, that's the only comment from my side.
Thank you. Thank you, Hugo. Robin.
Yeah, I can agree with Hugo there. I didn't speak when Torus presented, but I know Kirill since before, and I think his background into the problem is something that should have started the pitch because that's a good one. And one thing that I think everyone pitching should think about is you need to look at the problem and your company from our side of the table. I think a lot of the pitches that we see are from the point of the founders. You need to simplify the deck a little bit. You make it easier for us to understand the problem, the solution, the team, everything, because we view hundreds of cases. We understand for the founder is only one company, but we're sitting on the side where we need to select. So if you make it easier for us to understand what the problem is you're solving and how you're solving it, it's going to be easier for you to get our attention as well. So the long, lengthy, wordy slides, avoid them. Make it 3 bullets, make it easy to read. I think this is something to focus really, really on as well. And I think generally it was really high level today, and really happy to hear the pitches and the really good founders. And thank you for having us.
Thank you, Robin. Great to have you here. Thank you all advisor, all the people in the audience staying us until the end, all the presenters. Thanks so much for being with us today. We will have more FinTech events next year. That was the last event of this year, but we will have more. So follow us for the future events. Thank you so much and take care of yourself. Bye.
Thank you. All right.
Thank you.
Thank you.
Thank you.
Bye.